What's up, everybody? It's Guys here, and 2023 is shaping up to be quite an interesting year for investing. After all, we've seen cryptocurrencies bottom out while stocks are beginning to recover. So the question is, which one should you start with first? That is, if you're a beginner looking to get involved for the very first time. Well, before I answer that, I want to talk about each one individually, starting with number one. What are stocks? In the most basic terms, a stock represents a share of ownership in a company. For example, if Apple sold 1 million shares of stock at $10 per share, that means they raised $10 million from the public in exchange for a portion of their company. And then whenever you buy a share of stock, you're buying a tiny piece of that business. This gives you the ability to participate in the profits that come along with it. And historically speaking, this has been the most popular way to build wealth slowly over time. The stock market is also traded on regulated markets like the New York Stock Exchange and the NASDAQ. And because of that, prices tend to fluctuate less than other investments while also being backed by an actual company that hopefully has a competitive advantage in the marketplace. That's why when everything else goes to zero, companies like Colgate and Johnson & Johnson continue to survive and remain relevant throughout the entire economy. But even though stocks have a pretty solid track record, they're not always as exciting as other asset classes. Like number two, what is cryptocurrency? Well, think of it like this. If stocks represent ownership in a company, then cryptocurrencies are digital assets built on a technology called blockchain. Instead of being tied to a single company, cryptocurrency is a global decentralized network of peer-to-peer transactions that makes it nearly impossible to counterfeit or control. All transactions are verified by multiple computers around the world, and new coins are released into circulation by rewarding those who help validate transactions through a process called mining. Even though there are thousands of cryptocurrencies today, the largest and most popular ones like Bitcoin and Ethereum have the most liquidity, which means there are people trading them at all times, and therefore they're the easiest to buy and sell. Just remember though, just because something is popular doesn't mean it's going to go up in value. So now that we've covered the basics, let's discuss which is better for a beginner investor. And first, let's start with the pros and cons of crypto. And what makes this a good option for someone getting started is that cryptocurrency is accessible 24/7, 365 days a year. Plus, it's relatively easy to buy with just $5 or more. On top of that, there's far fewer ID checks and verification steps required to open an account compared to a brokerage firm. So if you want to get involved without having to jump through hoops, this could be a good option. Of course, this could also be considered a con depending on how you look at it, but for the purposes of accessibility and anonymity, this is something that might make crypto more appealing to a beginner. The second pro of cryptocurrency is the potential for returns. Throughout history, there have been countless stories of people turning $1,000 into millions overnight. And the reason why that's possible is because cryptocurrencies have a lot more upside than downside. For example, Bitcoin was worth just 10 cents in 2010, but today it's trading at over $40,000. That's over 100x return in just over a decade. Compare that to a stock like Apple, which at its peak so far was only $185. That's impressive, but it's nothing compared to the 100x gain of Bitcoin. So if you're looking for the highest potential returns, then cryptocurrency will almost always win. Third, when it comes to crypto, you hold the keys. Unlike stocks, there's no middlemen involved in your investment, meaning there's no brokers, clearing firms, or custodians holding your assets for you. And because of that, your crypto is completely safe as long as you keep your private keys in a safe place. This also opens the door for something called self-custody, where you can use your own hardware wallet to manage and store your own cryptocurrency. That way, if something happens to Gemini or Coinbase, it's not going to affect your overall portfolio. And finally, when it comes to cryptocurrency, anyone with an internet connection can invest. And because of that, it makes it possible for people in developing countries to access financial markets without needing a bank account. It's truly incredible. Although on the opposite side of the spectrum, we have the cons. And the biggest negative associated with cryptocurrency is the risk profile. The fact is, crypto is extremely volatile and unregulated, which means prices can swing drastically within seconds. Take, for instance, the 2018 bear market when Bitcoin went from $20,000 to $3,000, or when Luna and Celsius dropped to zero. Those are really extreme examples, but they do happen, and it's important to consider that before you jump in. Second, when it comes to cryptocurrency, there's no guarantee of success. Yes, we've seen certain cryptocurrencies deliver life-changing returns, but at the end of the day, it's still a high-risk speculative investment. Just like with the stock market, not every cryptocurrency is going to go up in value, and many of them will eventually become worthless. Third, another downside of crypto is that it's a relatively new asset class, so there's very little data to determine how it'll perform over the long term. For all we know, it could continue growing exponentially, or it could turn out to be the next tulip. There's simply no way to tell. Then fourth, since crypto is relatively new, there's also a lack of regulation, and that's both a positive and negative thing. On one hand, this allows crypto to move faster without being held back by bureaucracy. But on the other hand, that also means there's virtually no consumer protection if something were to go wrong. That's why it is so critical to practice self-custody and only invest money that you would be comfortable losing. Finally, fifth, although the barrier to entry is low when it comes to cryptocurrency, actually learning about it can be a bit overwhelming. Because things move so fast, it can be difficult to learn everything there is to know. And if you don't educate yourself, you could easily fall victim to scams or pump and dumps. Now, assuming you got all the way to this point of the video, I'm going to assume that you're at least curious about investing in stocks. So here's a few benefits to get you interested. First, stocks are generally safer than cryptocurrencies. As mentioned earlier, prices tend to fluctuate less, and there's a lot more transparency. That's because stocks are protected by various government agencies like the SEC and the SIPC, which provides up to $500,000 worth of insurance in the event that a brokerage firm goes bankrupt. So there's really no risk to your investment itself. Second, historically speaking, the stock market does a lot better than crypto. Over the last 100 years, the stock market has averaged about 7 to 10% annually, which isn't life-changing, but it's enough to make a significant amount of money over decades. On top of that, it's a lot more stable than crypto and less affected by global conflicts like war and inflation. Third, stocks are a lot easier to understand than cryptocurrency. After all, we've had hundreds of years to develop a stock market, banking system, accounting standards, and plenty of textbooks to learn about it. Like if you're trying to explain to someone how Bitcoin works, they're probably going to look at you like you're crazy. Fourth, stocks are held either directly with a broker or institution like a retirement account. That way, you don't need to worry about remembering a password or backing up a private key. Everything is handled automatically for you. And finally, fifth, stocks are a lot slower, which sounds kind of bad, but in reality, that's a good thing. Since it takes longer to buy and sell a stock, you're forced to be more patient and less impulsive with your trades. Plus, it also gives you time to reflect on whether or not you made the right decision. Of course, no investment is without its downsides. And when it comes to stocks, there's a few things to keep in mind. First, opening a brokerage account usually requires a lot more paperwork and verification steps. Second, there's also a minimum amount of money required to buy certain stocks. And third, you're only able to trade stocks when the market is open. That's 9:30 a.m. to 4 p.m. Eastern Standard Time, Monday through Friday. So now that we've covered the basics, which is better for a beginner? Well, as with most things in life, it depends. To be completely honest, there's no clear winner, because both investments serve different purposes. And ultimately, it comes down to what you want to invest in, how much you want to invest, and how much risk you're comfortable taking. In my opinion, if you want the highest potential returns and you are the type of person that's constantly reading articles, watching YouTube videos, and learning about the latest trends, then crypto could be a good option. On the other hand, if you're looking for something with a little bit less risk, you want to build wealth over a long period of time, and you're okay with slow and steady growth, then stocks might be a better option. As far as which one is more exciting, that's definitely going to go to cryptocurrency. After all, we've never seen anything like it before, and there's a lot of room for innovation. Although when it comes to getting rich, that's definitely going to go to stocks. When you factor in the long-term performance, it's pretty hard to beat. So which one is better for a beginner? Well, based on these two charts alone, it looks like crypto is the clear winner. But please take these results with a grain of salt. Remember, past performance does not indicate future results. Personally, I like to think of this like driving a car. If you're a new driver, you're probably going to start off with something affordable, easy to maneuver, and simple to operate. In that case, that would be stocks. They're easy to understand, they're well established, and they're the safest option. But as you continue driving, you're probably going to want to upgrade to something a little more flashy and exciting. In that case, that would be cryptocurrency. It's a newer, faster, and more exciting option, but you need to be prepared to handle it properly or else you could crash. So which one is best? Well, if you're already familiar with the stock market and you want to try something new, then crypto could be a good option. But if you're totally new to investing, then maybe it's a better idea to start with something a little more familiar. The choice is yours. So let me know in the comments below, which one are you going to choose? And if you enjoyed this video, also make sure to subscribe. Hope you have an awesome day and look forward to seeing you in the next one.